Price action, guys, is basically where we enter trades using a basic naked price chart like I have here. So we just need to know our support and resistance. And if you've taken our basic course already, you would know what you need in terms of support and resistance. So I basically outlined the chart as we have here, and we'll get right into it. If it's looking a bit complicated, don't worry, we'll simplify it very soon. Price action is very simple and it's very easy to learn. Let's get into it. Like I said, first thing we need to know is to identify the support and resistance. For me, I'm using the daily chart today, and you can do this even on your MetaTrader. I'm using TradingView. It makes it easier for you to see everything in a better way. Here I've identified the support on the daily chart. Like I said, wicks are it's great to know your candlesticks, guys, because wicks are great. This is a wick here. Wicks are a great way of identifying a major support or a major resistance. So here we can see the candlestick tested the support, and then once again it tested it twice. So this was confirmation that this is a clear support. And at the top here we have wicks again that test and test once more. So these test the resistance. This makes the top, which is the resistance. Simple as that. So we've identified the support and resistance. Now you should have a support, you should have a resistance. So the second part of price action is to determine a market's trend. So you have to differentiate if it is a consolidating market or trending market. We usually identify the uptrend if we're making higher highs and higher lows. As we can see here, we have higher highs. This is the highest here, and this is the second highest here, third highest there, fourth highest there. So we have higher highs, simple as that. And then we have higher lows. So this is the highest low, first highest low, second highest low, third highest low. So that's simple. That's an uptrend. So if you want to consider a downtrend, we would be looking for lower highs and lower lows. It's just the opposite of an uptrend, guys. Great. So now we've got an uptrend sorted. We know what an uptrend is. We've identified it. So we basically, what I've done is I've made a simple support here, trend line, using the trend lines, simple support here to there, and then here to there. That is our trend lines there. So we're showing that it should be moving within these trend lines, and we can trade that. We'll get right into that just now. So like I've said, we normally trade two types of trends. So that was the uptrend that we've identified there, and of course there is a downtrend if you identify that one. And then we have what we call a consolidating market. So if the market has no trend, we consider it as a consolidating market. So here I've basically highlighted what I considered a consolidating market here. Basically there is no exact trend, it's just bouncing between a support. I've just made the support here. As we can see, you test there, test there. This is a support that I've just identified here, and we're using the major resistance as our resistance for this consolidating trend. So as you can see, it just basically bounces around it. I think it's one of the easiest to trade as well, but there is no actual probability with this one. It's just a 50-50 as compared to if you're trading a trend that you know it's going higher and higher. So obviously if you have a buy position, your probability is higher. So trading an uptrend, as I said, is easier because the odds are in your favor. So now we are going to identify when to make clear trades. So we identify trades using price action. We learn to spot action patterns. As the nature of the market is repetitive, obviously, so we get clues as to the direction of the market. So like I said, the nature of the market is repetitive usually. So that's why we can identify things such as resistance and support. So now we're going to give you a practical view of how to spot a trade here. Okay, fine. So here we see there was a breakout from our existing support of the consolidating trend. So we don't take trades. Don't take trades until you receive confirmation. Here we see a wick. Like I said, candlesticks are very important. This is a wick. So here, right here, this is a wick. So with the wick, we identify that there is a bit of a support somewhere here. So we wait for maybe a test of that. We see here again, that's another wick. So there must be a resistance there. So we thought maybe that's the resistance right there. Goes down another wick here. But here we would think that we've made a lower low, right? So we're thinking it's a downtrend. Not exactly. Because here we can see there is a bit of resistance again. So we can mark that as we notice on the other candlestick now shows a clear indication of an uptrend here. We would have seen confirmation that this might actually be an uptrend, right? So we make a support here, and this might be our resistance here as a previous. See, this is a resistance there, and we will enter on the 50% mark, which is somewhere here. This is where we'll enter. This slightly below would be our stop loss here. Slightly below, maybe somewhere here, would be our stop loss. And this would be our trade here. This will be our take profit here. Maybe we can do multiple positions or whichever trading strategy you're using. And obviously it goes in our favor, hits our take profit, of course, and there we go. That we just made a trade right there. That's spot action. We see clues. This was a clue. This was a clue. We just use clues to identify a trade. That is spot action right there. So now we're seeing it's an uptrend. So obviously we are going to place buy trades, long positions. And make sure your stop loss is existent and isn't too easy for the market to actually stop you out. But guys, this method of price action is just it's an easy method. It's nice. It's very, like I said, easy to use. So it doesn't mean all your trades will go in your favor. Not all trades go within our favor. Sometimes our trades get stopped out. Like for example, if we had taken it here, it would have got stopped out somewhere there, you see, and then gone in our favor or whatever. But all I'm saying is, because all we look for is a method that helps us increase our probability of wins. You're looking for maybe 3-to-1 ratio. Every 3 trades you win, 1 you lose. That's as simple as it can be. If you have that, you will be profitable. It's as simple as that.